Hey guys, I had an opportunity to sit down with Cole Arnold. We talked about his past selling life insurance and getting out of the space. We talked about his journey of starting his business when it comes to bookkeeping and fractional CFO. We talked about why he has convertible term and why that made sense for his family and the goal of converting. He asked me questions about convertible term, and he also asked me questions about life insurance and church planning. If you love hearing people's stories and the different epiphanies and ahas that they've had on their journey, you're going to love this. Cole Arnold, welcome to the show, man. I'm so grateful that you are hopping on and going to share your story on your epiphanies and how you use life insurance in your own life.
Yeah, Caleb, thanks for the opportunity. Humbled by the opportunity to meet you again and see you.
So you sent me an email a while back, and it was pretty awesome for you to just, you've been watching the show and you're a fan, I would say. And you also you've kind of gone full circle when it comes to learning about the power of life insurance. So before we jump into that, I would love for you to give the 2-minute backstory on who you are, what you do. And then I really would love to hear okay, everyone's got a different journey of their epiphanies when it comes to insurance. Would love to hear that. And then I would love to end with talking about how you're using the asset right now and how you plan to use it in the future. And if you have any questions for me, this is also a fun time. So let's get started and a little bit of your backstory.
My name's Cole Arnold again. So just kind of a backstory on myself. Been in the financial space for a long time now. As soon as I graduated college, I've been in the accounting route pretty much my whole life. My interest in personal finance started with Dave Ramsey way back when. My parents gave me his CDs and I played on audio repeat, just trying to learn and try to see how I can best learn the different aspects of how money works, essentially. Because growing up, I honor my parents. They work their tail off in everything they do, but the conversation of money was just a struggle in the house a lot of times. And so I wanted that to be different. And especially so from that point on, I gained this passion to want to help families and businesses in the area of finance so that that type of a conversation isn't really a taboo topic, but it's beneficial.
What do you currently do now?
I currently serve clients on the basis of CFO advisory, fractional CFO, however you want to put it, and bookkeeping services. And then recently I've also started a financial class, currently on a volunteer basis for my church, kind of like a financial literacy class. And who knows, maybe the entrepreneurial spirit will come out of me to deliver that to more church congregations and maybe even some businesses for their employees.
I love it. And we can add difference between your financial literacy class versus if someone did financial peace with Dave Ramsey. What are the similarities and the differences?
Yeah, so a lot of similarities kind of deal with the heart behind it, because obviously it comes from a Christian background. So the delivery of it is, always trying to be conscious of your spending, but then also on the saving side, just having a good balance between saving and giving, because obviously there's where the most fulfillment is in life is, the value in which you give to other people and not what you consume. And the differences of Dave, I'd say his first 3 baby steps are pretty normal when it comes to save for that emergency fund, get rid of bad debt, and then, have that greater cushion of savings, if you will. But then after that, I kind of went to the wayside with his material because it's very broad. It's kind of very broad in how he delivers those topics of investing and stuff like that. I know that he delivers his message about investing in 401ks, mutual funds, high growth mutual funds, or whatever it may be. That was kind of uncomfortable to me because obviously he's a business owner and he has real estate in his portfolio, I think, as his main assets. To not be able to guide people that direction kind of sends a false hope of, oh, you're going to be a millionaire just by pumping yourself into these mutual funds and stuff. So
it's tricky because not everyone should be a business owner, and real estate is great until it's not. And so the mutual funds and the stock market are for sure that easiest thing to check the box on. But you're totally right. It may or may not get you the results. And a lot of times you're a millionaire and then you diversify your money. It's hard to become a millionaire the mutual fund way, but technically it's possible and people have done it. It just may or may not be the best way to go about that. All right, let's talk about life insurance. So on this journey, people don't just learn immediately that life insurance is a great asset. How did you stumble upon life insurance as an asset that you were oh, this actually might be something I want to put some of my money into?
Really, it was just a journey of trying to navigate what my purpose in life is. And life insurance kind of unlocked that. it was probably about 5 years ago or so, whenever I stumbled across different YouTube videos and stuff about like IUL space and stuff like that. And I left corporate cold turkey 3 years ago, actually, to try to sell life insurance, but I didn't fully believe in it. I didn't fully understand it. And it was like an IUL setup and stuff, and it was messy. So from the back end of that, I obviously made a mistake career-wise, but it unlocked my entrepreneur mindset first. And then while I was developing myself, I backed up in, what is the name? Simon Sinek, Find Your Why. These different concepts of trying to discover who I am, what value I can give back to the world. Another concept, Ikigai. I don't know if you ever heard of that concept before, but wonderful pursuit of finding your reason for being. And within that journey, I realized, okay, life is about what you have to give, not what you have to take from this life, but you're going to be remembered by what you give. And whenever it came back around to where I'm watching more videos about life insurance and stuff, it came around to like whole life insurance. So I dug into it deeper. And then I realized, okay, well, this is not only just an asset that can be used while you're living, but it taps completely into that legacy piece where I want to give back value to the generations after me.
When you first got into the life insurance space and you talked about potentially selling IULs, what was the attraction that made you want to like walk away from your full-time job to do that? And then what were the red flags or the things that when you started learning more about kind of rubbed you the wrong way?
The pie in the sky feeling, if you will, like, oh, you're going to make this much money if you do this, because obviously in the IUL space they promote like 120% like commission and stuff like that. So it's kind of like this false sense of hope going into it. Obviously, if you're not educated with how the products work and such, it can be really damaging. And whenever I mean, the people were great that I worked with, but the product itself just didn't make sense to me. I mean, I know that there's people in both spaces. Obviously, I watched almost all your videos, and I realized that there are people who specialize in the IUL space, but to me, it just didn't fully make sense.
So you'd say that you got attracted because it was like, hey, maybe I could make more money doing this. And then when you kind of learn more about it, you're like, oh, this is maybe not as good as maybe I thought going in from an, okay.
Exactly.
Yeah, I would say this is just good life advice. Anytime we do something solely for the money, normally when we look back, we're like, okay, that wasn't the right decision. And, you know, it's always should be part of the decision. You could do something that you're passionate about, but if there's no value that you're bringing to the marketplace, and as a result, you're not making any cash flow, then it's like, so we have to be practical. And so that's why it's always just good to hear from people. So, okay, you leave there. Did you end up selling yourself any life insurance at the time?
No, not at the time, because I didn't fully believe in even that product itself. I didn't.
What about it? You just were like, hey, the fees on this, the early cash val, like what about it was just like, hey, I feel like I was maybe sold a bill of goods that didn't translate.
Just financially, we were at a place where I just wasn't investing in myself fully. Okay. Barely even saving, even in regular mutual funds, let alone another product. I was just trying to sell it. I was literally at that place where I was just trying to sell it, and it was bad.
Then fast forward, you step away from that, and then what was like you got reintroduced to whole life insurance through, I believe, the infinite banking concept. Talk to me about how that transpired and like the epiphany there.
Which one did I find first? It was Brent Kessler, Money Multiplier. That's the first introduction that I truly had to it. Watched his whole material and stuff. That's when I first jumped into Becoming Your Own Banker by Nelson Nash. And so that was kind of like my really jump start into the whole thing. But then and then obviously I was in the place where I still had my life insurance license. So I was ready to like jump on his team. There was a lot more loopholes to like do that though. So I'm like, well, I mean, I think it'd be beneficial to be able to deliver this to people. So I'll just try to find someone else, I guess. And so then I end up coming across you guys at Better Wealth. And I'm like, I love the delivery better, when it comes to just the realness and the rawness of how you guys deliver the truth behind whole life insurance and, building that legacy.
What were some of the epiphanies hit you when it came to the differences and like what made you want to actually pull the trigger?
Oh, with whole life insurance, that is. To really pull the trigger is because of the fact that just really the legacy piece behind it, the guaranteed aspects of whole life insurance, knowing that when my time comes, my family is going to be provided for, period. There's no levers that you have to pull. There's no like alterations you have to make to the product. It's naturally built on a guaranteed basis to provide for my family after I'm gone. So that's the biggest value I feel like I can give to them.
And are you using your policy right now actively for anything?
No, not currently. So right now we're in the convertible term stage right now. Yeah. So also I'm obviously in the place where I'm providing more value to the marketplace, like you said. And then once we get to the place where we can convert that, I hope to grow that.
Let's walk through that. I mean, we have videos on convertible term. I'm a big fan. It's like you get the benefit of life insurance, but you also protecting your ability to create cash flow and protect your family is more important than a savings component. It's just straight up. It is. And so what you're doing is you are getting convertible term, which we have plenty of videos that break that down, but essentially it's term insurance. It's quite cheap to protect your family and give you the ability to convert without having to show proof of insurability, which is another way of having to take a health exam. You can overfund or max fund a life insurance policy and use the benefits of quote unquote infinite banking. But right now, as you're starting your business, as you're growing and all, it would be unwise for you to take additional money, fund a life insurance policy if that life insurance policy creates stress on cash flow. And right now you're at a place where in a business, you're much better off, pouring that right back into business or going right into a personal emergency fund that has more liquidity. And so I think it's important to know, because there are some people in your situation that are steered into permanent life insurance, and with the right intentions, they have the right intentions, but we find that sometimes it's premature. So I think it's a great example of like the life insurance message, but then giving yourself optionality in the future.
Yeah, correct. I mean, if I'm going to promote cash flow management skills to the businesses that I serve, I better be doing it pretty well myself personally. So that's just I'm always trying to having a budget mindset too.
What's your goal in when you're going to convert? Like, do you have a cash flow amount of like, when I hit this amount of money that I can save on an annual basis, this would make sense? Yeah,
no, for sure. I think that it'd be most beneficial. I think that obviously you guys have at least promoted the minimum of $10,000 on an annual basis to be able to put towards that. And I think that would be at least the minimum that I would want to hit, obviously.
It's a good target to shoot for. Cole, what questions do you have for me? I know we've had conversations on and off. I'm really proud of some of the decisions that you've made, and I wish you and your family the absolute best. What questions do you have for me? I'm an open book when it comes to money, insurance. Obviously, these questions will also be heard from other people. So if you have fire away, man.
Yeah, for sure. So I guess probably the first question that I have is in context with that convertible term, because obviously right now I'm just like, it's just a term insurance policy. I'm just kind of riding it out. Is there a certain level that people usually need to reach on a revenue basis before it'd be a good idea to make that conversion? I know, like, obviously you just said something about like $10,000 saving.
Yeah, I think and you know this better than almost anybody, is there's a difference between gross revenue and net revenue. And so at the end of the day, it comes down to focus on how much we can save. And we have people that don't make a ton of money that are out saving the person that's making a lot more money, but their consumption's a lot higher. I think it really comes down to money that we want to save. And that $10,000 mark is not a hard and fast, but it's a good guideline to be like, okay, can we save at least 10 grand the first year? But ideally, can we create a system where we can save that every year? And then it comes down to, because term insurance is an amazing protection vehicle, but it really is an expense. It's an expense. You're paying for it. You're getting a benefit for your family, but those dollars are doing one job: protecting your family. Whereas when it's a permanent policy, you're getting protection and you're getting some other benefits. But the downfall is if you put $10,000 in, the term insurance protection's going to be greater than even. So there's a world where you kind of have a mix of both. And I think it all comes down to your savings rate and just making sure that that's not pressured. And then also making sure, like, what are we going to do? Like, what's going to be the outcome of saving money into insurance? Because the alternative is putting it into a Roth IRA and other things. And so it's like comparing the pros and cons of, like, market versus maybe having control and reinvesting in your business or other things like real estate. But you and I both have known people that their business and real estate have not performed well. So there's the life insurance aspect is the foundation, but anytime you build a foundation, you need to be thoughtful about what you're going to build on that foundation.
Correct. Yeah, true.
Hey guys, I just wanted to interrupt real quick. If you're watching this and have an index universal life policy, a whole life policy, have any type of insurance policy in general, and you're like, I want to know if I'm on the right track. I want to know if this is set up properly. We at Better Wealth want to help you. We want to give you a free policy analysis and show you, are you on the right track? Is there some things that you potentially could be doing better? And so we have a link down below that you will have access to. We would encourage you, if you have a policy and you want to see if you're on the right track, check that out. And if you're someone that's watching this and you're like, I want to talk to someone maybe setting up a policy for myself, or I have questions, we would love to serve you. You can also see a link to have a call with someone on our team. Back to the episode.
I had another question concerning churches specifically. So I'm a part of the finance committee with my church. And so obviously we're doing the yearly budgets and stuff like that. Currently, right now, they do a high yield savings account. Can you elaborate on the benefit? I know that you guys already did a video on the benefit for churches to be able to do this on like the key employees, like the pastor or something like that. Is there any, what would you suggest for that?
This is amazing because churches have a nonprofit status. And so by definition, they don't have to pay taxes if they, are under the proper church status. And so one of the things that you could do is a church could buy life insurance on the pastor, it's that key man insurance. The premiums of that, aren't necessarily taxed because within the church, that's not anything radical because it's a tax-free entity. And then that cash value can build up. And a lot of times churches use capital to buy new buildings or new vehicles and, invest in other things so that capital is able to be used. And potentially the pastor itself could potentially use that as a form of compensation. Again, take everything this with a grain of salt. If this is something that you're interested in, I would highly recommend someone connect with our team and talk that this is something that they want to learn more about. But the reality is, the benefit is you get that liquidity, you get that potential benefit to the pastor, and the death benefit would go back to the church when that pastor passes away. So in a way, the disadvantage of that versus using a high yield savings account is a high yield savings account gives you earlier access to money. And so if that matters to the church, then don't do the life insurance. But if they're willing to take a few steps back with having a little less liquidity early on, they still have liquidity, but a little less. And there's going to build it over time, which it's actually going to cross over. They're going to have more money in the future. And they have a death benefit that replenishes the church. And they can use that capital throughout their life. They potentially get life insurance with the extra benefit of money going in tax-free because it's a nonprofit. That's definitely something to look into. And I gave kind of the overview, but I would recommend, if this is something that interests people, to talk to someone on our team and see, like, is this strategy actually something that your nonprofit or church should look into?
Awesome. That's fantastic. Thank you. Yeah. So, outside of that, I don't think there's really any initial other questions that I have concerning the AND asset. It's a valuable tool to unlock your mentality, to give in your life, to give value to other people. It already puts you in a mindset of giving anyway. So that's the desire that I have to share with other people around me, like in my class and stuff.
Cool. As you know, I ask this question to many people as we end the show. It's the legacy question. And if this was your last day on earth and you're with the people that you love the most and you couldn't give them any podcast, you couldn't give them any book, you couldn't give them anything other than that conversation, what would you say and why?
Thank you. I've actually prepared for this question. So I'm excited for this. Know God and make him known. The second thing I would say is find your ikigai, your why, or your reason for being, however you want to put it. Because once you find that, you're going to be able to give tons of value back to people. And if you truly find it, I'm in this state now. I don't want to retire. I don't want to retire with what I do. Nelson, all the way to the end of his days, he was investing into people with what he loves. And that's what I desire for myself and others.
Amazing. Cole, I really appreciate you taking time to be on the show. Appreciate you being authentic and saying, hey, this is where I'm at. This is the journey that I've been on. The more people that we can share their experiences, I think it just humanizes this whole strategy. Yeah. Love this. And again, I wish you the absolute best.
Yeah. Thank you, Kev. Have a good one.
Hey guys, if you like this episode, a couple things to say. Number one, if you like this episode, liking and commenting tells YouTube that you love this content and they push it out to more people. Also, if you want to learn more about life insurance, we have resources below. And if you want to talk to someone on our team, we also have a link. You can schedule a time with someone on my team that can really delve into, does life insurance make sense? Where would it fit into your plan? And does it better your life? Again, we appreciate you. And we're just so grateful for the many people around the country, around the world that watch our content. This is only made possible because of you.